Greetings, market rebels. Welcome to this week's macro measure combined with the sector situation video that we've done in the past. Our combo marches on. Oh, oops. It is Friday, November 22nd, 2024. I'm Wayne, and let's see. It's about 10 in front of 3 p.m. here on the East Coast. So it's nearly 2:50. It looks like. Here is our trusty market rebellion disclaimer. Here is our trusty intellectual property rights notice. And then here is last week's sort of, I guess you would say, info slide, bullet slide. But I did last week on the fly, and it did not show up. The recording did not show up. So I was very deliberate in making sure that it did record. I had to do it from Miami, and I had to do the best I could under the circumstances. There were time constraints and everything else, and it didn't show up, so we couldn't send it up. My apologies for that. Don't know exactly what happened, but I can say that it did show up a while later. So it actually came out and ended up going into my email maybe a few days later. I can't even remember. I think I recorded it on Sunday. So it was very strange. Don't know what happened there. Was very frustrated by it. Actually, the most favored scenario, just for the record, it may still be uploaded at some point, but most favored scenario was probably just needed to back off. We would see how the market found support, acted near support, 20 SMA, mainly in the SPY, and then see if that works. It should. It's the first time down since the new highs were made. And then we try to rise from there, which we have done. And I actually think I threw in that NVIDIA's EPS might be a good catalyst for them to use to get things going. And then we see what the follow through is from there. But it doesn't really matter. It's all in the history book. So let's move on to this week. And that video may appear, but I doubt it has a lot of interesting comments, given that it was more about the current week that we're in rather than the upcoming week that we're about to approach. This is just a quick selective review because, again, I was pressed for time. Just said I thought there were value in some of those comments in both cases. They were both grouped together, kind of following along the same thoughts and themes. So that was really that. It wasn't anything special that way, and it certainly wasn't anything special other than the most likely scenario, which turned out to, at least for now, and the way it looks like we're going to close, a pretty good guess. For whatever that's worth. Anyway, here's this week's slide. Song remains the same as what I'm calling it this week. There's a lot of things that are gone. There's new things, but there's also some things that, wait a minute. No, how'd this end up here? My bad. This is it. I don't know how that other one got in there. I thought I moved that out of the way. This is our slide. My apologies. So new stuff in here, but it's really talking about the same old stuff because we've been, I guess we should be happy about it, but we've been stuck in this situation where a lot of things have remained unchanged, but the critical drivers being probably a lot of liquidity this year, this sort of excitement over political developments. It seems like from Wall Street, that's the line they've put out through media anyway, and things along those lines. So let's get into it. Let me grab my laser pointer that's not yet trusty, but let's hope that it can become trusty. So yeah, I would say, look, after I reviewed things here today, been a really busy week for unusual activity. So I will try to remember to sprinkle some of those comments in from watching it all week long. And by the way, before I do get started, actually, I should say it really was, as always, it was great to meet folks in Miami, folks that have been with the services, and you finally get to meet them in person. Maybe folks that have been around for years and things like that. So always nice to do that, but always a tough week because trying to trade off of a laptop is not easy to do, especially if you're like me and you like to evaluate a lot of different things. But it was really great to meet folks. A small price to pay, but I like being back at the cockpit for sure at home. with all my monitors. It's much more streamlined. Anyway, after reviewing the charts, I would say that things look nearly stellar. It's the same old attitude that I've had. I feel like I've had to come to it time and time again over the course of the year, and that's been especially really since I would say sometime in the summer. But it would just take news to derail this market, and none of it's really developed. There's been different threats here and there, but nothing's really spilled over in such a bad way. And so to this point, and I think that's really what it's going to take now, from what I see. It is interesting though. I plan to hit on SMH and Nvidia, the dollar, TNX. They're all kind of pesky and not really too shiny right now, too bright. In as the way that I'm reading them, which could be off the mark, but I just feel like a lot of things that would kind of come down to here, where we're talking about the rate drop cycle that they're talking about and have been for forever. That would maybe be at risk of decelerating, and then the inflation story could be reemerging. There's early signs of that as well. So that doesn't seem to be that great. You got yields that have headed back up. The dollar's been super pesky. I think it even made a new recovery high today. Dollar really very strong, high dollar, usually tough for trade, tougher on EPS reporting from the big multinationals. That's the typical rap that the strong dollar gets. And let's see if they just continue to ignore that, or it doesn't matter this time because of this or whatever the case may be. But just worth noting those things. I think the megas have acted better, and I think Tesla's performance really helped that. But otherwise, they're acting well. Aside from Nvidia, which is still it's a little tough right now, in terms of really, if that would start to engage in a bigger way, we could really be maybe powering strongly into Q1 of 2025, assuming news neutrality. Anyway, let's move to the next one. I will cover this too. Big picture chart views still suggest more potential upside. Seasonality calendars should be good times through end of year, but as I noted, I think that may have been last week, I would still be wary of the easy credit ripoffs, aka looks too good, too easy. Right now, things look tremendous. Let's just remind ourselves, according to Husband, we're at an all-time extreme valuation level. We talked about that before, but my spidey sense has been way off the mark. And I would say in terms of time, well, she's a ticking and nothing's really happened here. I'm going to make the political comment that given ostensible Trump, which means Trump as he's portrayed as this anti-establishment swamp drainer, assuming that that's true, which I'm not sure about anything, and it's not a slight against Trump or people that don't care for Trump. I'm just conveying my honest thoughts on it and trying to steer clear of political commentary that's incendiary. But basically, I'm looking at it like if Trump is who he's purported to be, right? This great tornado that's going to come in and put a hurting on the government that's grown too big, whatever, all the case, too expensive. What you can, list goes on and on and on. Then to me, something that's as entrenched as I think that apparatus is and has been for decades and decades and decades, I'll be very surprised if there are no mishaps. And so a lot of these things are cheesy movie lines that have been repackaged by me, by the way. But that's what I'm getting at. I just don't. That's one of the things I just don't think that somehow Trump just has smooth sailing, gets in there on, I guess, January 20th would be the normal date, I believe. And it's all as people used to say, unicorns, rainbows, roses, and sunshine, whatever your combo is. But just would be surprised for essentially those entrenched players to just, after what we saw over the course of the last, I don't know, decade-ish of time, that there's nothing that happens. That doesn't mean there's another assassination attempt, or I don't mean it that way. I just mean that I think I think Washington D.C. is is a very corrupted spot and has been for a very long time. I don't think that's a secret. And I just feel like people that have been engaged in corruption at some level would probably fight tooth and nail to prevent that. But then the other side of that coin, prevent that from coming to light. Anyway, the other side of that coin is that Trump isn't who he's purported to be, and which would probably be the real movie twist that I think would catch most people sleeping at this point. So we'll see what happens. All we can do is hope for the best, prepare for the worst, and if you have a religious bent to you, pray. Anyway, I'm sticking with the rolling complacency. I still see it, as I noted many times. It's very common, right? The gang operates on their own calendar. If I haven't said that enough lately, I'm saying it this week. I wanted to make sure of that because despite, I don't want to keep something there like rolling complacency and have someone read that and think, well, maybe he's really getting worried. No, I mean, I am worried because I feel like the news situation, the lack of it is a little eerie to me. It's not what my sort of spidey sense thinks should be happening. But the rolling complacency can be there for a very long time, as can extreme valuations. So I had conversations trying to make that clear, my perspective on it. Not that that's the way that it is, just my take on it from my own experience. And in Miami, we just covered that, time and time again. And I try to encourage folks to just, even if you're a super bear, right, you can still make money on the upside. You just don't want to be as aggressive maybe as you normally would given where we are, and you might want to be a little more prudent in how you handle things, but there's no reason to just completely sit it out, because the trend to this point is still up, right? We could be at a major turning point literally on Monday morning, but as of now the trend is still up, so I would try to continue to go with it. As a matter of fact, a lot of the UOA that we've put in the last couple of weeks has been very tilted to the bull side, and I try to keep things balanced. But at times like this, it's very difficult to do. Very difficult. So let's just wrap up this top section. World full with major issues. That's a repeater. Won't matter until they matter. That's always been the case, and that's just again another repeater. The gang has gotten what they bet on. And then again, I noted that could help expenditure commitments, could help confidence. So even though there's been some weak data, there could be a pickup in U.S. data because of the post-election psychology. This is the claim that the financial press was claiming that Wall Street thought that Trump would be more business friendly if he were to win and get in there. So that's the spin, at least. So that's what they got, what they bet on basically, and they did front run the market, in my opinion, a lot prior to this, but if they seem to get what they wanted. Sectors of market breadth continue to sparkle. The SMH fraud claims did die down a little bit for now, but they may still hold the key if you get really big accounting problems that are real and can't be covered up. I don't know that to be the case, by the way. I'm just saying there's reports of this. There have been reports. They continue to be out there. That's clearly an issue, and that could really undermine a lot of things, but let's not dwell on that. So on that note, what I'm going to do is stop the share, and I'm going to reposition, and we'll get into the first of the charts, and I'll try to come back and hit these things because I really don't want to, let's see here. I don't need this in my way. There it is. So the first thing I'm going to do is get us on the right screen, which should be screen 4, and that should be working right there. Okay, and it is. And so I'm starting out this week with something a little different, which has to do with the big picture chart views still suggest more potential upside. Excuse me, our very first line in this week's bullets. And here's my SPY monthly. And you can see this goes back a pretty good ways. And I'm going back to calling this essentially, right, this sort of like secular bull situation we've been in ever since the Ponzi scheme decided to grow wings and inject steroids in the form of QE, right? So we've had this super uber, whatever you want to call it, meta Ponzi. I don't even know. I'm running out of ways to describe it, but this super Ponzi has been accelerated. The liquidity this last year has just been really strong in terms of what the Treasury's done, as we've been noting, which is not an original thought, but just that does tend to work its way into the stock market somehow, and you end up with higher stock prices. So there you have it. And I think it's only natural with respect to inflation, really, that stock prices adjust themselves higher, because a lot of these companies really have been able to pass on the inflation hits that they've suffered to the consumer and gotten away with it, because some of this stuff is just inelastic. But even on things that are elastic for the consumer, it just doesn't seem to matter all that much to this point. I guess that's because it's such a debt addicted society, right? There's just too, in my opinion, there's just so much credit and credit being extended. But that's what it's become. And then you get bailouts when the big bad wolf shows up. That's when the bailouts happen, and we all get to subsidize the banks while they track people down and try to collect their debts from them. Really a great setup, but just kind of tells you who's in charge in the end, I guess. Anyway, SPY. This is why I've just continued to say we've got to call it like we see it. If you even if you accelerate the trend a little bit and you really go bonkers and all this new administration excitement, I think I've got this thing going to about 700 before it hits this very simple resistance line. And that could happen in the first quarter, which seems like, wait a minute, you're saying, we're going to go up that much to 700 in SPY. But remember, now that they've got this thing inflation goosed, liquidity goosed all the way towards 600, you're only talking about a 15% move. And you could say, well, wait a minute, that's still a very strong move. It is. But a lot of times as you sort of get towards maybe the eventual goal, if you want to call it that, which would be sort of taking this up to resistance, that can accelerate. It can turn into a real stampede. And that's not something that is I'd say very rare. In fact, I would say it has happened a good deal of times where people just stampede right into the top. But there's talk out there that some people say we're not fully engaged here, that there's players that have yet to really commit. And if they're brought in, they're going to be the marginal buyer, and if they're the marginal buyer, and that adds to the risk on mentality that's dominating right now, then you do get this squeezy melt, as I've been calling it, blow off, surge, whatever you want to call it. And if a lot of you may recall, I've said for the longest time that the one missing element, not that it has to appear, but we haven't really had that. When is it time to sell? This thing is going to have this blow off. Usually you get that kind of a big kind of punctuation mark, exclamation point on the big rally when things just absolutely go ballistic or become very silly. And we haven't really done that yet. Some people may have said, are you crazy? I'm starting to see signs of that. We talked about that in Miami somewhat. There are some things that are just getting a little 1999-ish now. We did see that a while back, but I mean, in the recent times since we sort of bottomed in, I guess, a couple falls ago, and then we did it again really last year, this has been kind of controlled, right? So you haven't gotten that really just massive whoosh higher. So I'm not predicting that. I'm just saying that it often does happen in stocks, at least in indices or index ETFs like this. I would think, right, it could as well. I do have some memories of that happening, but I couldn't tell you off the top of my head exactly when. But I do have that sense that I've seen that before as well. But stocks, certainly I've seen it, and there's room here. And that doesn't mean, right, that we are out of the woods or I'm putting away my concerns over risk, right? I do think you have to always see where support is. There's a lot of ways to do it. You can use your SMAs that are popular that a lot of people like. It's not a bad idea because they're so widely followed, and so because they are widely followed, they sort of have that self-fulfilling predictive type stuff associated with them. But I would say really probably at this point you would need to be below, I'm going to call it about 560. I would say you need to be below 560 before you're really in a worrisome position. You don't get below 560, and in the short run that should bode well for the market. As far as more upside, I said I think you could get to 700ish by, let's say, March or April, just to throw out some numbers. And again, you all know me. I'm keeping it simple. I'm not getting into anything heavy duty here. We're not pulling out fancy, GAN stuff or Elliott stuff or other Astro stuff you can do for all these projections. I'm just keeping it very basic and throwing these numbers out just to kind of give folks an idea, because I left there with a sense that some people, which is understandable, are starting to really wonder about how long can this sustain itself. And I just, as I was conveying to a few of the folks there, I would have felt and kind of still do feel the way they do about certain things. But 1999 really changed my way of thinking about things forever, I think, because of what happened in the NASDAQ that year and how that led to the top in the March of 2000 and all that kind of stuff. So the kind of moves that I saw then that were completely detached from any realistic future reality and therefore stream of income from these for these companies, it was blew my mind and just kind of blew up everything I learned in college about fundamental analysis. So so anyway, I changed my tune and just said, whatever will be, and just went with Doris Day on that, because I now know what they're capable of, and it doesn't have any place. You're not going to find a lot of ancient Greek philosophic thought on on that, and how, or Greek geometry, that you can make sense out of all of it. It is what it is. That I'm just cut from that cloth now. Like I said, that if it you can't rule it out, because you just, once 99 happened and things doubled or went even further, I just changed my tune forever on what could happen. So I've got the short term area here being a little bit of a problem, but this is up, right? I've got the Qs kind of running into trouble up about 40 points from here. So, I mean, that would be a good, 8% clip, just given the kind of, if we don't launch immediately, right? We kind of launch on a normal slope. So I've got this thing going up about 40 points before it hits this line. And then if it continues on from there, I've got this going up again, much like the spiders, somewhere between 10 to 15%, potentially more, not, and the more from here. And the reason I'm covering this is just because I just want people to realize that I haven't turned into an uber permeable type. I just know that I've seen this many times, more, of course, in stocks than in major index ETFs, because there's only really 4 of these, right? But I have seen stocks where I've drawn these types of long-term lines, and only to watch a line, when early in my career, I would watch these lines and think that they would become irrelevant, and then go back to the stock after having not looked at it in a while. And then you're wondering, well, why is this line appearing? What's this from? And then you go back and look where you anchored the line, and then you're like, I'll be damned if that thing's not working its way up towards my line again. And they run into trouble. And so a line like this is a great example of that, where time and time again, you may have started laying out a line early on and it came back towards it, and it seemed to impact the price of it, or you got very close to it. And you could probably even make it look a little bit better than that. So I still see upside potential there. I don't think, and what I should also qualify is, just because we hit this line doesn't mean there's upside potential, because you can have what people used to call throwovers that just continue as if the line isn't there. But the line to me has always represented the realistic potential for something. And of course, the longer it takes to get there, the greater the potential. if it tries to go there if it tries to go there tomorrow, right, it'll hit at a lower level than it would if it were to work its way up gradually, kind of on this positive slope that it's been on, which is why, again, a lot of people like to see a 45-degree slope because it's controlled, relatively speaking, and you can keep grinding higher, and that's ultimately what people like. But anyway, there's potential there. I'll do it quickly in the other ones. IWM, I did something a little different here. It's probably got more potential in theory, and you can see this line I'm working with is a little bit different on this one, but I wanted to really incorporate this here in this kind of, because I think this is an important area that's really stalled out IWM now for several years. So I wanted to incorporate that into my line. And this here, this was probably beyond these peaks. So I took kind of like two important areas where you got probably a little bit too far to the upside at that point in time, and here where you really were served up a multi-year issue on your hands, really, that took until about now to resolve. And as we were saying a while ago, if the IWM would finally ignite, this thing had real upside potential. And I was just ballparking it at the time, saying somewhere between 270 to 280 is where we arrived at. I think I originally, back when it was lower, said about 265, and then essentially saying that it's lagging behind so far. If it takes out this 244 number, this thing's got plenty of upside potential. You could see that depending on how quickly it does it, and with another projection I'm working with, I think this 300 to 311 area is now what I would be looking at if it could get through 280, let's say. So you might say, well, why not use this projection here? You could. I mean, that's right in the middle of our 270, 280 range we switched to after throwing out 265 is my recollection. So that's really where, to me, this thing could ultimately go to. I did say that and XAU I would keep my eyes on because they really represent a ton of potential. The XAU would be a historic breakout, and the IWM just really undervalued relative to the other major index ETFs for obvious reasons. The fact that it's doing this with yields, I don't know, going up, leveling off after going up, and I don't know, maybe not coming down the way that a lot of these pie in the skyers were pushing yet again. But it's done it, and the momentum's there, and that's why I had conversations. There's a lot of really bright rebels out there and sharp people and very successful people in different businesses and have different careers, and they're also savvy investors and traders, and they're looking to get better and better at everything, which I commend everyone on. And I was just saying to a lot of them, just I understand some of the qualms that people have, but these trends just last. They just persist so much longer than a lot of us would expect, that are more, let's say, down to earth might be a way to put it. And so you just have to respect that these trends can have their day in the sun, much like, look, you break out and then suddenly it's all the rage, right? And you get this kind of 4 months of just amazing performance that it could really, you could get something like that. So don't take your eyes off that. If the market is able to maintain its uptrend, would be my simple message to convey. And as far as the other stuff goes on the big picture, the diamonds, to me, when it finally shows up, the diamonds are, they had me a little worried when we had this rising wedge, but remember, we're looking at a different situation. This is a monthly candle chart. So I was looking at this, and you've got this possibility of really, I think, still going up towards 50,000 on the Dow, or you could say 500 on the DIA. So that's the potential that I see before it gets into where I'd start to say, we're bumping up against trend. We're not even there yet. So just keep that in mind. Now, that doesn't mean I kept this very clean. I took away all my drawings, and I blame all of you for that. I'll have to redo them all at some point when it necessitates it. But the reason why is because I wanted to have something very simple for everyone to see, nothing confusing, nothing noisy, just to be able to see that if you just take this big step back, look at these bigger picture charts, there's still a lot of potential there. And remember, it's not a prediction. It's just an acknowledgement that if you believe in charts the way I do, and you've worked with this kind of simple stuff before and seen it bear out as many times as I have, and it's many times more than I can count, more than I can remember, that's why I'm paying it the respect that I am. And like I said before, it's mainly that I've seen this happen in individual issues, but it does happen in the major index ETFs, or if you're charting the cash index, it happens there as well. So just take that for what it's worth. I've got this thing still going. As a matter of fact, I've continued to, nothing brilliant about me, but I've continued to say that on balance, right, if we look at these sectors, which is one reason we do this, that overall it's been hard, very hard at times to say, well, the market's got major problems here. Look at this and this. There were times we were probably lucky where we saw some real, I would say, cracks in the market's armor. We talked about all hell breaking loose, and then luckily or unluckily, however you want to look at it, that week it did. It was kind of surprised me because I was thinking it was, not necessarily going to happen within days. If something did happen, I thought it would be maybe a couple of weeks. And that's why I don't usually show up and say, oh, hell could break loose, but I did that particular time because I saw some signs I didn't like in the charts and other factors. But the things have really fixed themselves so many times since then. And even after we've seen big beatdowns in market breadth, and I may as well show that since I verbally stumbled upon it. Where is my market breadth? Should be right there. And it's hidden. Come on, Mark. There it is. Yeah, so here it is. Don't worry about the symbol. It's a diamonds anyway, so it's good enough. But you can see how the market breadth really has come after that corrective activity that we thought we needed to see, and the finding of support this week that we thought could happen, probably should happen, and the fact that it held, which again I said first time down, and you're in an uptrend, and there's no news, you usually expect support to hold. That's why we call it that, right? And then you go, and that's really what we've gotten here. And you can see the market breadth is reflective of that it's starting to pick up and turn again, right? So it's very hard to just, I know these are basic measures of market breadth and we look at them, and I don't go into details on them, just kind of doing like this quick visual health check on market breadth. But my way of looking at it is, without going into all the details, is these things are, you really want to see these things confirm. You don't want to see these things diverge too much. And if a lot of them are really hanging in there, well, they don't always move in perfect lockstep where you make new market highs and everything else is at its most stellar. But as long as they're sort of on balance saying, yeah, things are back to improving again, and as you're moving back towards the highest high that you've registered, you're only a few points away. It's really hard to say, no, this thing really has trouble. Now, there's always something you can pick a fight with, right, and use to justify it, almost always. But what I would say, let me reduce this. Where was I on sectors? I think I was here. Was I here? Yeah. But you can always pick a fight, and I would say the SMH and the dollar and the yields, that's probably your best place to say, aha, that's where I'm going to get them. But otherwise, right, and you could argue that you're overbought a little bit here and there. You could also argue that there's compound RSI divergence forming on some of these major index ETFs, which that's why I can't go into all the details, because that's not what people want. That's not what people want. But I'll try to remember to show some of these things if I can. But I just want everyone to kind of absorb this screen here, and you can see that. Let me do my normal check, right? That from the old sector situation days, and something I've been doing for a very long time. And I like to look at XLE, XLF, and XTN. And I look at those sort of as health gauges. And despite XTN maybe not being at its highest high, it still has been improving strongly for a while. And for the longest time, it was a big problem earlier in the year. And it's really turned, and it's right on its way back. So transports are on their way back. Okay, and that's a good sign if you ask me. XLF, new all-time high, had a UOA idea in there. We've had them in there. It's just been a juggernaut. XLE, disappointment for the longest time. Probably lucky to stay away from a lot of bullish ideas in there for a while when it would threaten to break out and not. sprinkled a few in because you never know if your take is going to be right on things. There were some opportunities along the way, but I'm a little worried right now because the paper was so strong in so many names this week on the upside. But in the short run, you could see that this thing's overbought. So I attached overbought warnings to virtually every bullish idea. My best scenario in there is that we back off, right? We have a nice little pullback, much like we did in the market last week into this week, find support, and then start to rise again. That would be the best thing that could happen. And hopefully some of those ideas will see another round of paper appear, and so on and so forth. But reality is, right, you can look across this board and they've got the three sort of health checks that I just covered: XTN, XLF, XLE. They've all been acting a lot better. They've all been acting well, or they've been acting really well for a long time. You've got the other former leaders when XLK and XLC were not doing much. XLI and XLB really picked up the slack. They're doing well. XLU, which is the new and improved XLU that is reflective of what's been going on with various technological developments, so on and so forth. That's back towards the highs. So you've had this whole column doing better. XLB lagging a little bit. That could be due to more of a global situation, maybe not so much the US, because I do know that there's other parts of the globe are not firing. But this, look, here's your discretionary right back near the highest highs. Your XLP, your staples are trying to break out from this corrective channel that they've been in, and they're on their way back right now. They do have a gap. We'll see. Let's see. Real estate is trying to do the same to break out of a corrective channel. Might be a little ahead of itself now, but we'll see. Defensive sector, typically XLV and the RFK Jr. situation, that's a different story. But that also bounced this week. And then, of course, XLK and XLC, they're kind of muddled right now. They're not doing that much, but they did have a real surge post-election. So they're digesting that. Nothing's really bad there, and they haven't broken below what I would say was the critical support, nearby support. So just looking at that tells you that overall things are pretty good. Now, would it be better if these were all looking perfect and not overbought and on their way up? Yeah. So if you really want to pick a fight and not just say, let me just take a reading, right? You really want to pick a fight or have problems with this or that, you can. But I'm just making the on balance case. I'm just making the basic on balance case. This stuff doesn't look bad. Now, if we can add to that, we can take a look at XAU, which we know has a very long, big picture breakout potential type pattern in place. We also acknowledge that this is a highly manipulated area of the market. In my recollection and my experience, it always has been. It's been going on for probably longer than the 45 years that I've known about it, since I was a kid. But basically, this did have a nice week. It is coming back. You can make the arguments that the trend is about to get broken. So what you would have to look at on that, though, would be, right, if this lower high gets puts in, it rolls over. And if it does do that roll over and sort of put a double bottom in, or attempt to put one and fails, that would be a problem there. But we noted it was overdone at the time. We should just note the big picture here. There was some paper that came back in here. We'll see. But there's the pattern. You can't see it. Oops. You know what? You can't see it as well. So I'm just going to move over to GLD. You can see the pattern better on GLD or SLV, which we had paper on. I think both. We did have GDX paper. And here's the pattern. And that is your kind of cup and handle-ish that you've been firing above the top of the handle for some time. You hit this projection level now, and you've got a little bit of hesitation after it got very toasty. I mean, the RSI, and remember, this is a monthly chart. The RSI was 83 on the monthly. So I think some of you may remember that I said I was going to dump my shares of these things that I was long, which were various things. In here, I dumped those and kind of switched to some options that were a lot less risky. and those did not work out. I still have them, but I didn't want to miss a situation where I suddenly was completely out. I fortunately I did the smart thing, I think, and just reduced my risk after a great ride, because how the overboughtness and then the binary nature of the how they could treat this thing around the election and around post election. Anyway, so there's the big picture there. We talked about the big picture in IWM. Let's look at SMH, because this is an issue for me. The fact that I like to see the leader lead. You could see, since we're on monthly, I'll leave it there. All the Fruit Loops lines just showed up. Sorry about that. Let me get us out of the Fruit Loop stuff. But the big picture stuff that you can see there, you can see that we're sort of between a recent high and low. So you're sort of in this consolidation in a big picture way. As far as the current situation, right, it's really not as impressive as other things. We remain well off of the highest high. So interesting to note that at this point, SMH, right, it's hard to believe this, but SMH is a real laggard, not something we've been able to say a lot about in recent times, but a real laggard. It got this week. It got caught up in the SMA ganglion that's right there, and that's all your SMAs that are shorter term, basically 10 through really even the 150s nearby, with only the purple 200 really as an outlier relative to this kind of confluence area. So it's kind of bundled up in there now, because you would think so many own this. Does this finally ignite into end of the year so that the gang can celebrate their brilliance through massive window painted bonuses right at the end of the year? I don't know. I mean, that's certainly a thought, obviously, of mine, but I don't see this thing really having turned yet. So this is a little concerning, because the fact that it hasn't popped through here the way that it did before when it tried to shoot up, that's sort of a little bit of a telling sign potentially that, and remember this, I still consider this the leader. So if this really starts to roll over with a lower high here and then does come back to the 200 and starts to work below there, remember, it could always be a flush out before they do pull off the end of the year scamper. But at the same time, it might not be. So if you get a breakdown here, you could see that on the momentum basis, ever since this high, things have really, if you just kind of look at the trend of these indicators, most of them are just sort of showing you weakening. And that's right in line with the price overall, except for this high right here, which is very similar. But it's just not looking as good. It's not acting well yet. I would say that is a problem. And I would continue to urge people to keep that on there. And I've got this stuff in my way over here, my bad. I'm trying to get this out of my way. It's just in my way. So my apologies. But so things are a little concerning to me. I don't like the way this behaved this week. Sure, it stayed away from the 200, but it really wasn't able to do much. And it had the big NVIDIA thing. So I'm wondering out loud if this is overowned. I'm just wondering if at the moment they're going to want to chase some people out of this. And then maybe after that, if the market stays intact, the uptrend that is, then try to sort of goose into year's end, into markup, as I said earlier. So keep that in mind. There's an unfilled gap up here that I just highlighted, not very well, but you'll see when I pull it this way, you'll see that big oval. That's where it is. It's way up there. So that's up there. That would be something for them to sort of shoot towards if they did, which is not far from the high, frankly, but that would be maybe their end of year target if they pull off this maneuver. Remember, they don't have to test the 200. They don't have to dip below it, as I'm sort of throwing out, but they could just goose right through the 20 and be up and away. And then as long as they take this out, then those highs there, they're on their way higher from there. So it's a little bit of a mess in there. A lot of the other charts that are off camera are not very convincing, right? They're also sort of showing hesitation, right, from folks to commit. So sometimes you get that where everybody agrees and there's too many the people that are in that crowd that the in crowd doesn't want in that crowd, if that made any sense. So they're going to maybe put a little shakeout together. We shall see. Clearly, though, remember, if they do ignite this thing, knowing that if the market stays strong, this could have a really nice push to, you could look here. I mean, I honestly think in here, you could get maybe 15% by the end of the year from where it is right now. And that's quite a bit, right? In just over a month's time, a month and a week, 5 weeks. So if they ignite it, but that is not looking as good as it should under the circumstances. Again, don't know all the details as to why. From what I've heard, things are still strong in that area, but we are not seeing the stocks perform right now. So let's try to look at the megas as a package, as we often do, to see what they offer. And I think what we're going to see is that as a package, they've all performed, but you all know that that's been probably helped to a great extent by, wow, I'm getting Thinkorswim is really fighting with my F here, FT. And then let me go here, plus I will do NFLX. I will then also probably help NVIDIA, which did not help, and then Tesla. So let's look at the mega cap big dogs. And you can see that those made a new highest high. And we were talking about those running at some point. And of course, post-election, they did. I still think there's more in the tank there potentially. You have to because of the end of year factor, right? But some of the individual names are not acting as well. Some are really outperforming. Some are not doing all that much, and probably a little bit overbought thanks to really Tesla, or at least approaching overbought. So maybe a little bit toasty there. So just be careful in those, but at least they're acting better. So again, that's why I highlighted the missing elements this week. It's a little bit different. As a package, these are all not bad, but we know why. It's really not across every name that looks stellar. Just a little bit overdone. What I did want to show more on a daily chart with some indicators rather than just talk big picture is SPY. And what I would try to note on here is just that this is where you're going to get those compound negative divergence issues that people have, where you continue to see some of mainly the RSI, which is the red and sort of neutral colored line there, the only line of them all. The others are histograms and just dashes. But that is just not registering the kind of strength that we saw back in here. So that's what some people are going to refer to as a compound divergence. Not to say that they're wrong, but that's a completely legitimate technical assessment at the moment. But that stuff can go on and on and on and on from my experience. So I don't like hanging my hat on it in terms of that means that it's immediately doomed. I never really jumped to that conclusion. Oh no, we're immediately doomed because of this compound divergence. It can be something that you should keep noting, and if it keeps getting worse and worse, that can ultimately become a problem. But you have to, again, when it becomes a problem is obviously where the rubber meets the road, and that's not easy based on this, is from my experience, has not been easy to narrow that down with a lot of confidence. Anyway, you also have to think in terms of, well, wait a minute, what's going on here? There's the sort of pullback. There's the test that I talked about in the video that never went out. Here's the bounce we thought could happen into NVIDIA and through. Wasn't as strong because of NVIDIA itself, I guess. But you're what, 1% away basically from testing the all-time high. So I would think, right, my most likely scenario is they at least try to do that at this point. But you have to also acknowledge that if you fall shy visually, it could be a lower high, right? And you could be right back at the 20-day quite quickly. You wouldn't take much if they kind of fail here and start rolling over to be right back where it's like, lower high, hits the rising 20-day in light blue, and then you start worrying about it. Remember, this gap has never been filled to this point, And you could say that about a lot of gaps, by the way. There's a lot of gaps in SPY that have never been filled to this point, but this is the most recent one on the downside that was left on the downside that we would be looking at right now. But continues to use, either the 20 in blue or the rising gold, which is the 50, most of the time to find support. We've had a couple cracks here and there. I think we were talking about it back in here when we said, oh, there could be something that really turns into a problem, but that turned out to be the yen carry thing, which was apparently resolved with great speed. Anyway, that is that on SPY. Don't have a lot to add there. I don't want to get into more than that. I just think that the problem we have in seasonality is that sometimes this is a little sketchy for a little bit longer. Usually things end up okay in November, though. And we're kind of getting towards that final week. We're getting towards the big American holiday. Usually the market rallies into that. It seems like the street and their friends prefer to have people in a celebratory, kind of congratulatory, positive mindset with respect to the stock market. So it doesn't happen every time, but I would say most of the time it does. Let me think about other things that I wanted to cover. Yeah, so probably should just take a look at the dollar. I mean, this thing rolling the way that it has, and then making this new recovery high today. I don't know why I think Thinkorswim tends to scale the calendar like that, but yeah, you can see. I mean, you could say, well, it's getting overdone. It is, but these things can really, really roll when there's big macro reasons for it. So that's what you've got. Again, have to think, right? This is not really a great situation for U.S. exporters, but might mean that things are getting a lot pricier come the holiday season in different places abroad. We'll see. We'll see about that. And of course, then there's the TNX colon CGI. Oops. Sorry, I'm having a little bit of my wife attended the event with me. She was just there along with me. She didn't really sit in and listen to anything. She just did her own thing. She needed a break. And unfortunately, she's come home with a little cold. And I guess I'm about to come down with it too. It's starting to seem like as I'm talking here. But anyway, CGI, TNX CGI, this is what I'm talking about. I mean, yields are backed off. Maybe they'll roll over. Would hope that they would, but it's certainly a much different story right where we are now. So I think once again that things are the whole rates lower sooner crowd really just continues to mainly pile up L's. They really seem to get way ahead of the situation with all these predictions that a lot of them just haven't been borne out, and they just continue. The markets continue to, I guess, frustrate them. That's that. The SMH is the main worrisome situation. Let's see what else we've got here on this. Let's make sure we're covering other things here. So we talked about that. I did talk about that. Given that the data seems like it's turning, it could keep turning more because of the confidence factor and because they would maybe are more willing to make expenditure commitments. Going to remind everybody about the global easing is synchronizing. We've talked about that for a while. So the next round of Ponzi has launched. We talked about that for a while. Typically means higher stock prices, and I just added has so far. Once again, not like we're patting that factor on its back, but it just continues to be the case. The intermediate term, the take is right. The country, world are in for smooth sailing. I did talk about that to a degree. Is it straight up from here? That was really something I had last week, and I still am wondering a little bit about that because of the eerie calm. But really, we are set typically with seasonality, post-election seasonality, typical year in, year out, sort of December rally into the holidays seasonality, the end of year seasonality, starting off the year strongly with a new administration seasonality. All these different little seasonality factors really do support the market going higher. So it's I continue to go back to it. I think it really has to take some kind of a news development or a news item that's been buried to sort of really perk up. Otherwise, I just don't see what's going to knock it off its haunches. Uh, the rates, I mean, the rates or yields moving back up and dollar moving back up has been a big snooze fest for the market. They just don't seem to care whatsoever. So could change, but as far as what we've seen so far, hasn't changed. Anyway, I think we can see that risk on is there. And some of the crypto stuff we've seen lately, we've had UOA on that as well. Some of the coin UOA, our company, Market Rebellion, put some things out on X about that. Just some of the moves were incredible. Sometimes when I put $30 or $40 wide spreads into these ideas because they're so expensive to trade or the IB is so high or both, I just think, well, it's a pretty widespread. It might not always get max out, and then they just shred through upside call verticals as if they're nothing, and you go $100 higher, and you're just wondering, like, well, there's always the option to morph that into and morph and roll, so you can take the vertical and turn it into an out of the money call, and that's unencumbered completely after you've really hopefully made some good returns. But still, just some of these moves are amazing. The risk on mindset's dominant, but due to complacency, potential news, and short-term overboughtness, I would still say roll, 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 because I think your RSIs are getting up there on certain things. And I would say you got to do that. Again, that has to do with the stretch, right? So I would roll up because of the stretch that we have in certain things, and down when the news cycle turns after we do get a surge like we've seen. Not to say that it's over, but if it does roll over for some reason, that's usually news developments that just continue to not really support the market, and it sort of goes in waves. And we've had very supportive news. So if we do get a turn at some point, the news tends to turn with the trend and stay that way for a while until we get a shift back the other way. So anyway, my most likely scenario for this week would be news neutral assumption is baked in as always. I think they try to challenge the high. And I think that losing this week's lows or the 20-day is problematic. So I'll just flash that one more time so everybody can see what I mean. And I'll go back to SPY. But you'll look at the light blue SMA that underpins this week's lows or this week's lows. And I'm just going to chart that alone. But that's really, to me, is that's your obvious area. That is very, very obvious that where the short-term pivot is, right? You've got three or four sessions right near there. So you could call that 585, 584. The 20-day probably should scare you if you're starting to lose that, because it's only at 587, which is not even really 0.5% away from where you could argue that the real support is. So that would be where you get worried, especially because that could mean we have a lower high worked into the cards if we roll over early next week. But I would think, right, again, news neutral, I would think they try to work it back up and see what they can do up towards those highs. And then you've got double top potential, you've got lower high potential, you've got false breakout potential, you've got breakout for real potential, right? All those. So we just got to take it as it comes. Let's see. Back onto here. You know where I'm at. Yeah. So the market environment, like, I think we have to say this week we've seen a nice recovery after the expected support test. There is potential because it's been so long since we had a real pullback. So I think you have to be careful if the news does shift, that you really could get a swift and sharp one. But you also, in the absence of that, because bears have probably been hanging on, expecting something to finally give in their favor, they could really be in trouble. So could people that have lagging performance that need to try to catch up fast at the end of the year. So I would say, as of this moment in time, I would favor the squeezy melt. You need news, and without news to really derail. So without news, this thing probably, given how good the charts look, yeah, you could make arguments this needs to correct a little longer, this or that. But if they start to do their normal goosing the way that seasonality and so many other factors suggest that they should, I would expect that to be the top scenario for the end of the year at this point in time. The window of news is window of time is still open for unexpected news. That's been something that right, I've been dead wrong about expecting that to happen, but I still, again, as what I explained earlier, to me, somewhere between now and the 20th, if Trump is ostensibly who he's purported to be, I have to think that something develops. Don't know what that could be. This isn't exactly what I was thinking about before, but it's just another thought that I thought I would share, basically based on the chessboard as it sits right now. I still think that economic financial factors are underappreciated myself in the short term, but the data, as I noted, is shaping up. My only problem, and I talked about it, the rate drop problem and the inflation reemerging problem. I would drop down to DEFCON 3 at this point, not 5, all the way down for minor reasons. And that's only because of this, mainly because of this problem, that I think it's a little eerie. And, but I've been dead wrong about that so far. I really thought there would be something, but we didn't get it. We haven't gotten it yet. We may not. We'll see. I'm leaving a lot of items on the table, but my main problem, as you can see, I think the charts look very good. We've been at this position where I try to find problems with the charts, and all I can find are minor ones. And that's been the case a lot more than anything else, really, for much of this year. Not that I've got the final say on it, but my take has just been, no, I really can't find that many problems here. And it's stayed that way, and the market continues to perform. So all you can really do is try to be objective and check things out and see where that leaves you. And I think that's really where it's left us so many times. Or if we were overbought and we had to really say tough call because strong trend, strong action, but overbought, but not wanting to fight against the market too much, which again is, I think, helped us a lot this year. But my main issue right now is the eerie calm and the fait accompli attitude. Because I think a lot of people think it's overdone. False sense of victory, security right now. That's my main problem, which that's not a big problem, really, right? That can happen a lot. So that doesn't mean anything. It doesn't mean there's pending doom. It just means that that's the big problem. But otherwise, to me, the charts and this particular group right here, the overall charts, the breadth, the sectors, the way that the major indexes are acting, all the rest of it, very hard to say much bad about it, other than nitpicky stuff, I think, in reality. But your SMH, your NVIDIA, the dollar, the TNX, that's where the issues are. So I think on that, I'm going to call it a wrap. I can feel my voice getting more gravelly, and that's probably not a good sign. I might be heading down the path my poor wife has already been down, and hopefully is on her way out of that forest and coming back and starting to feel better by now. I haven't talked with her in a while. She's resting. But let's see. Thinking if there's anything else. No, I think that's really it. I'm going to wish everyone a wonderful weekend. If you get this early, I'm going to thank everyone again for tuning in. I do hope something I covered in this video helps you in this upcoming week or some week in the future. And again, it was great to meet a lot of folks this past week in Miami and in our March, I think in our March or at our March event somewhere in the middle of March in Las Vegas. If I'm heading there, it'll be nice to hopefully see more and more people. Hopefully we have a good, nice, strong bull market that lasts for years and years that we can all do well with. And we all get together again a few times here and there to commiserate at these events and finally get to meet folks. So everyone take care until next time. And thanks again for tuning in.